So this is the second part of our swing trading series. In this particular part, we'll be looking at support and resistance while swing trading. In the first part, we've just looked at some basics of swing trading. And in this particular part, I'll be showing you reliable methods on how to choose support and resistance level that we will be applying in various swing trading strategies ahead. So let's get started.
In this channel, we talk about trading, investing, and market analysis to help you become a better investor and trader. So if you are new here, consider subscribing.
So the learning objectives for this series is as follows. So in this part, I'll be taking you through some basics of support and resistance. Then I'll be showing how support and resistance is applied based on technical analysis concepts. I'll also be highlighting the importance of Fibonacci retracement in identifying high probability support and resistance level. And then I'll be moving to a sort of a unique concept for support and resistance that I use. Though this concept is based on market profile volume nodes. So I'll be showing you what a basic volume node is, how do you categorize between a high volume node and a low volume node. And then I'll help you identify support and resistance level based on volume nodes. So in case I've actually split this support and resistance part into two phases. In the first part, I'm going to show you the traditional method of using support and resistance. And in the second part, we'll be doing it through volume profile. So in case any one of you does not have access to volume profile charts, you can use the traditional method as well that I'm going to show you in combination with Fibonacci retracement. Both of these methods work very well, and you can choose based on your own preference. So I'll just show you what a basic support level means in technical analysis. So here we have a chart. We have had some retracement of about 5 to 10% on the downside. And what we see here, that is between November 16th and 2017 Jan, that price sort of fluctuates in a range. So if you see, if we were at this point, then this would have been the lowest low level. This got violated somewhere in November, that's a December. And then this support line was tested many times over the next few days. Now the typical mistake that beginners do while trying to learn about support and resistance is that they tend to get too focused on one particular level. Now before coming to this aspect, I'll just show you how resistance looks. Now this is how typical resistance looks. That price has actually probed this region several times and then it actually moves down. In the previous chart, price actually probed this region many times and the price actually moved up, right? So the mistake that traders do is that they tend to get too focused on one particular level. Hypothetically, let's assume this is 200. So, traders tend to get into a habit of saying that 200 is the resistance level. Now, what I want to show you is that resistance or support, it actually always functions as a range and not as a particular level. And if you try to look at charts from now on with respect to range, that is range as support and range as resistance, then I think your trading would definitely improve going ahead in terms of quick decision making. Now I'll just make my point clear here. So see, this is a low formed in January 2016. Then this low got breached in February 2016, and then price sort of fluctuated here. So you cannot say that this level of 170 is the support here. The reason being that maximum amount of price rotation or fluctuation has happened in this range, which is why the range between 200 and 180 is actually valid support in this particular chart. Same goes for this segment, that is November 2016 and March 2017. Again, the same thing has repeated, that price has sort of consolidated in a range, taken proper support. Mind you, in February, this lower low was breached. So obviously it would look as this support level being breached. But what happens is that, again, if you look at this level as a range, and if you analyze price here, then this would have been a valid support range, and you can sort of manage your trade better based on a well-defined range. Again, this repeats here. we aren't looking for a particular level as support. We are looking for a 5 to 10% range. Only that can be classified as a valid swing trading support. Now, when I discuss positional trading or extremely long-term trading, how you have to determine support and resistance in those particular methods, I'll show you in detail. But for swing trading, in case you're a swing trader or you want to learn this method, get into a habit of identifying support and resistance as a range and not as a particular single level. So same concept applies to resistance. In this particular chart, this range becomes the resistance. For this phase, again, I have identified this box. For this phase, again, we have seen a particular range. So if you see all these four segments, that is time segments in the same chart, the range of support or range of resistance actually varies between 5 to 7%. Which actually makes sense because in case you've identified, in case you're trading here, right, and you mark this as resistance, you know what, based on the volatility of this particular asset itself, this would be a wrong approach because highest high of this point cannot be a valid resistance or a support level until and unless you have a well-defined sort of a volatility based range. Now this volatility concept I have covered in my Bank Nifty video also, and the market analysis video that I do every week, which is why it's always safe if you're trying to swing trade to identify resistance or support as a particular range. Now I'll show you why this is important when I'll come to the Fibonacci retracement aspect of identifying high probability support and resistance levels. So this is the Fibonacci retracement chart. Now we have a proper downtrend here, then the price retraces on the upside and then sort of moves ahead. I think this is Nifty 50, or I think it's some infrastructure index, I think. Yeah, so what I'm trying to show you is that once price forms a bottom and it moves up, in swing trading especially, this Fibonacci retracement of 50% level plays a vital role in determining support or resistance. So in subsequent slides, I have hidden this 38.2% retracement level and I have hidden this 61.8% level. I've just kept this 50% level here, right? So what we've seen is that price has moved up and it finally retraces and takes support at 50% retracement, and then it moves ahead. So which is why the previous slide that I showed you about proper range as support or resistance, this is what comes into picture here. I have not marked this particular box as support because it would have cluttered the chart too much. But if you can just imagine a box here, right? So this would have been a valid support level at 50% retracement level. So this is how you combine Fibonacci retracement with sort of traditional technical analysis method of marking out support and resistance. There are just two minor adjustments we have done. Number one is that instead of a particular level, we are marking out a particular range. And number two, to validate that particular range that we'll mark out, we'll be plotting Fibonacci retracement levels so that we can visualize whether the price has taken support at 50% retracement or not. There would be times when price would actually take support at the 38.2% level itself. That is also completely fine. So this particular chart is for resistance. Now what has happened is, for support breaking down. What has happened is I've taken a swing from this low to this point and I've extended the 50% retracement line on the right side. So what we see is that over a period of many days, price tries to take support at this 50% retracement level. In fact, there is one instance here after which price moved and then sort of consolidated sideways. But look at this struggle at 50% retracement line. So what is happening here is that at 50% retracement level, there is a lot of fight going on between buyers and sellers, and eventually sellers actually overpower buyers and price steadily moves down. So whatever strategies we are going to discuss from fifth part and onwards, this is where these concepts would come in handy. I've taken up this support and resistance topic earlier because so that you can get some amount of time to start practicing on how to apply these particular concepts till the point we actually reach the strategies section. So what we have to do is we have to identify two relevant swing points and then just mark out 50% retracement level. In case you want to learn how you have to mark out relevant swing lows, that is a pivot low and pivot high, I've placed a link in the description box below because I've done a separate video on this. Please go through that. So once the price actually breaks down the 50% retracement level, that is this low, it steadily moves down. So this is, I've purposely pulled out this phase of market. This is the 2008 corrective action. Most of the traders who are new to the market or even veterans this was a phase which was extremely scary in market where price was just falling. But if you would have taken out some time to analyze what is going on, you would have seen that how beautifully main index or some key stocks, I would say many key stocks, actually followed this simple principle of Fibonacci retracement. So this was the fall that we saw in January, where price fell from 6,300 to 4,700. So what I've done is I've picked out this swing high and this swing low, and this is the 50% retracement. Look after a few months how price started taking resistance here and then moved down. Eventually price again rallied somewhere in May, June. Again, it has taken resistance around this level. Again, what I want to highlight is don't be stuck to one level. You have to mark out a box or a sort of a range on a chart that becomes a particular, that becomes your range of support and resistance, and then price moves down. So then again, I take up one swing high here and the swing low formed here. I put out the 50% retracement line and I extended. Look over the subsequent months, again prices found resistance at 50% retracement level and moved down. All right. So the first thing that would come to your mind is this has happened in 2008. Whether such things happen in our current market conditions or not. I've put out a chart of 2018 as well. I'll just come to that in a bit, but I just want to show you that even in the most panic sort of phases in market, there are some basic technical principles which always work. Now this could have been 38.2% also or 61.2, but that is fine. Most of the times you would see that 50% retracement actually acts as an excellent indicator when it comes to identifying support and resistance level based on Fibonacci retracement. So do keep this in mind. So this is 2018. I just told you I'll show you a chart of 2018 as well. So this is the corrective action in Nifty that we have seen in 2018. Price has retraced from 11,000 to we are currently at 10,852, but we had retraced till about 10,000. So what I've done is I've selected this swing high and this swing low, and I've extended 50% retracement and 61.8% retracement level. Now at the time of recording, this is July 10th. So see what is happening. Price is trying to sustain above this 50% and 61.8% retracement level. If you compare this chart with 2008 chart, what was consistently happening was that price was not able to breach this 50% retracement mark, and hence we saw a follow-up of the down move. But something exactly opposite is happening in the current phase, which is that price is trying to move above the 50% and 61.8 retracement level. I tried to move here, then it moved down, but again it has moved up. It sort of formed support region here, and now it is trying to move up again. So had price been in a negative price structure, it would have faced a lot of resistance at 50% and 61.8%. So which is why even in my weekly videos, I've just marked out some trend levels, and I've always encouraged people who want to trade in Nifty 50 or Bank Nifty to try and be long even in this scenario. It's only because price structure analysis is not suggesting a breakdown in Nifty or Bank Nifty or some large cap index as well. So while the news flow is very negative in the current context, but still a price itself trying to move above the 50% and 61.8% level shows that there is some sort of strength in the market. So this is the same chart. What I've done in this previous chart is I've taken swing high here and swing low at this mark. Now for this phase, for this chart, what I've done is I've taken this swing low that is formed at 10,000 and the swing high to see what has happened. Now the same thing that was working in 2008, it is still working in 2018, that is 10 years down the line. Now what we've seen here is that Nifty has bounced from 10,000 to about 11,000, and then look, the retracement that has happened has taken support at 50% again. So which is why I want to show you that if you want to become a serious swing trader, get into a habit of identifying proper support and resistance level based on point number one, that is range marking. Don't get into a habit of marking out one particular level. And number two, on your charts, start using Fibonacci retracement, especially the 50% mark. So this is not a historical chart. This is the current chart. We are in July. This is July. So look what has happened over the past 2 months. Price has taken support again at 50% retracement. And since then it has not retraced back, or rather tested this level. And today we have seen price actually moving well above 10,900 as well. So I hope my point is clear. So before moving on to the concept of high volume node, again I would repeat that the previous section, what we have seen is classic technical analysis method where we mark out support and resistance level for swing trading. I've just made two small modifications. Number one, instead of a particular level, we are trying to pick out a range as support and resistance. And number two, we are using the Fibonacci retracement 50% retracement indicator to pick out high probability support and resistance regions. Now this is a market profile concept that is of volume nodes. I have done about 10 videos on market profile. That's a complete course. In case you're interested, you can go through it. But I'll just sum up what high volume node means. In this particular chart, what you're seeing is I've marked out two regions. One is in the green line and one is in the orange line. Now this is the low volume node where very less volume activity happens. And this is the high volume node where you're seeing prices sort of fluctuating a lot and then it moves up, right? So I'll just explain you how price actually moves. So what we have is that we form a typical region. A lot of price rotation happens here, a lot of exchange between buyers and sellers. So naturally the volume that forms is pretty high. I'll just show you how it looks. So this is the high volume node where a lot of volume is formed. And then finally price breaks out and it quickly moves to the low volume node. Why does it quickly move? Because in this region there is not much volume present, not much trading activities has happened, which is why there won't be many sellers that you will find in this region, and price moves to the low volume node. And then again price rotation begins. In case the trend is strong, it will just zoom past this level and gravitate towards the next high volume node. But in case the trend is not strong, then price again rotates here, and this low volume node which we saw during this phase, this now becomes a high volume node. Why does it become a high volume node? Well, the amount of trading activity that has happened here brings in more amount of buyers and sellers in this region. So this is how the concept of price moving from low volume node to high volume node and then from high volume node to low volume node actually works. So it's a very basic concept. I'll just take you through some charts. It'll be clear. I know at this stage, especially if you're very new to market profile concepts, this would sort of be confusing, but in subsequent slides, this thing will be very clear to you. So what we have here is volume profile, that is volume node from this point, this swing low to this swing high, right? So this chart I've just placed to show you how a low volume node and high volume node looks. Now this is a high volume node where you see so much of volume that is spurting out, and this is a low volume node. Look at the trading activity here. It is less when compared to this. Now in market profile concept, even this will be categorized as high volume node, and this small volume that you see here is low volume node. But again, there's a slight modification from my end. What I particularly like to do is, instead of picking out this single high volume region, I pick out a proper range. For me, this entire node becomes a sort of a range, very similar to the traditional technical analysis support and resistance I showed you a few slides back. So again, I won't be inclined to mark this particular line here as low volume node. I would actually take a particular range, right? So instead of identifying one single point as support or resistance, I'm using high volume node and low volume node as some sort of a range, depending on what sort of trading activity has happened, to mark them as high volume node or low volume node. Now again, this concept will be confusing, so what you can do is just go through this video once and then repeat again after some time, so that these concepts actually you can sort of focus more on this concept, especially if this is the first time you're watching this. So I'll now explain you how you can use support and resistance in form of high volume node. So what I've done is I've plotted volume profile from this swing high to this swing low. So whatever volume activity you are seeing is for this down move only, right? So what we are seeing here is that price is consistently forming lower high and lower low. So once we mark out a particular swing move that is on the upside or downside, the next step is to mark out which is the most relevant high volume node. Well, if you look at this region, this is extremely high on volume, right? But look at this region also and this region also, volume is not less here. So which is why instead of just marking out this as a high volume node, what I do is I'll mark out this entire region as high volume node. Now why this is relevant is because once this swing is completed, look what price is doing here. Since this is a high volume node region, price is actually rotating here, and buyers are actually seeing if there is still strength that comes in, which would actually take prices higher. So which is why just above this high volume node, you see these two strong candles that are forming, right? It's only because there is a lot of trading activity that has happened here, and it takes some bit of buying here so that this range is crossed. Now, as soon as this range is crossed, price actually moves swiftly to the next high volume node. That is, price has transitioned from this volume node to the next volume node, which is high. So this happens from this level to this, right? And again, what you see is because this is a high volume node, so price has had some sort of retracement here. So be very careful here. If you want, just pause this video here, because I'll explain this once again. The reason why you see some sort of consolidation happening here is because price has approached a high volume node. Now, as soon as price breaks out, it immediately moves up to the next high volume node region. And again, the sort of consolidation or retracement that you're seeing is because of this high volume node itself. Now, again, you see two strong demand candles forming here, very similar to these two candles, and then you swiftly see that price again moves up. Why it is moving up so with momentum? Because there is not much trading activity that has happened at higher levels. So which is why it becomes extremely easy for price to move. Whenever you see two very big, or let's say clearly marked out high volume node regions, wait for the price to move above those, because during that phase, price will do absolutely nothing. It will just sort of rotate in a flat sort of range. So that is how the concept of trend development and range rotation happens, because price rotates in sort of a horizontal range, and when the price breaks out, it is actually moving out of a high volume node region and gravitating towards a low volume node. So how do you choose these two swing payment points? Well, the move has to be at least 8 to 10%. So this move is about 10%, which is why I've chosen these 2 points. And once we finish with these 2 points, we simply plot the volume profile indicator and we get these volume distributions. I hope I'm clear. So this was high volume node as support. Why support? Because once price broke out here, it sort of consolidated but never came below this high volume node region, and then it moved up. Again, once the price broke out here, it took support, that is this retracement again at this high volume node region, and it moved up, right? So what I'm going to show you here is for resistance. Again, what I've chosen is I've chosen this swing high and this swing low. So these are the volume distributions that has happened. So let's assume we are here. So now what happens is, look how much of sort of price is struggling in this range. Remember, our first step was that we draw a volume profile region over 10% or more. Ideally, it can be 8 to 10%. Our second step is that we need to identify the most relevant high volume node, which is obviously this region, because this is where maximum volume transaction has happened. And then we kind of go and analyze the complete price structure. Now I'll just repeat this box that you see. This is the region where volume profile has been plotted. That is this swing high to this swing low, and currently we are trading here. So once we have this distribution on the chart, in case price has to break out of this high volume node, which is the next relevant volume node, it is this region. So if trend is strong, price will break out here and simply gravitate towards this high volume node. But look what happens. Because there is so much of volume distribution that has happened, price tries to break out, but it sort of again fails. And then finally it breaks this level and moves down. Again, remember, I've not chosen one particular level as resistance or support. What I've done is I've marked out an entire region. And why it is helpful is because in case you choose this as a particular support or resistance level and you find price here, you would see, you would feel that, you know what, price is higher than this particular level. So this is a proper breakout, and you would start scaling in or increasing your position size. So, but when you have a particular range marked, you actually sort of escape this mistake, because you want a decisive breakout and decisive price movement to happen away from this range, which does not happen in this case. And eventually you see this range being broken on the downside, and then price moves down. Look where it retraces back and takes resistance. It is again at this high volume node, and then it moves away. So this is how a high volume node can act as a support or a resistance while trying to swing trade in the direction of trend. Now this support and resistance level that you've seen under high volume node section, I'll be covering this up in great detail when we'll be moving to swing trading strategies. But I just wanted to give you a brief overview so that you start practicing this concept. In case you found this concept little complicated, you can use the traditional concept that I've shown you along with Fibonacci retracement, because that is something that even I prefer. I do look at this high volume node support and resistance as well. I kind of combine both of those methods and try and determine valid support and resistance level in swing trading. But in case you're not comfortable with this high volume node method, you can simply switch to that method. Both actually are the same, and they kind of identify support and resistance within a range of 1 or 2% itself. So as far as long term is concerned, switching to either this method or the previous method, it won't make much of a difference. So again, what I've shown here is that this is the box where I've taken swing high here and swing low here. This is a profile which is drawn over a 10% move. So our first step is that we choose such a region that is 8 to 10%, draw a volume profile, then mark out the most relevant high volume node, which is this volume node, right? So now let us assume price is here. So price tries to move up, but it faces resistance in this high volume node region. It sort of again moves down, but this time again, it sort of tries to move up, faces resistance, but it is successful in breaking out of this range. But look what happens after that. In this initial phase, this HVN that I've marked out in green was acting as a resistance, but once the price broke out, this HVN now started acting as support, because look at the price rotation here. And then how swiftly price has moved away from this high volume node to this high volume node. Look at the vertical rise. So I hope my point is clear, and you can clearly see why it's worth exploring even this method when it comes to support and resistance. So again, since this is a high volume node, we again see some sort of price retracement and rotation happening, and then price again takes off. Now this is how price moves from a high volume node to low volume node, and then again to a high volume node. Again, all these concepts I'll be covering in great detail when I'll be taking up swing trading's strategy section. So this is the volume profile that I've drawn from this swing high to this swing low. Again, this is 8 to 10%. Our second step becomes to identify the most valid high volume node, which is this region. The second most important volume node is at this region. So what happens is price moves below this region, takes resistance a couple of times, and then moves up. This acts as a support, and price rallies. Again, what we have seen is that price rotation happens as the previous high volume node itself. Now this chart and the previous chart are actually the same, but what I'm trying to mark out is the difference between high volume node and the traditional method. So we have seen how we have marked support and resistance based on high volume node. Now, in case we don't have all of this on the chart and we just follow the traditional method without the range marking and without Fibonacci, what you would have done is that instead of marking this as a support or resistance region, you would have simply taken this swing high and drawn a line, and this would have become your resistance. See, this is not wrong, but I hope till now you have seen why there is a better way, both on traditional method basis and this high volume node basis, to mark out high probability support and resistance levels. All you have to do is move away from this concept of drawing a line at one particular level and try and see support and resistance in forms of proper ranges. That is 1 to 3%, that is fine. So I'll just sum up the key point. So I've shown you some modification of the traditional method wherein we look for ranges and we don't look for one particular level. I've then shown you how you can combine a simple Fibonacci retracement indicator, that is 50% retracement, to identify high probable support and resistance level. Now I've also shown you how you can do how you can identify support and resistance level based on high volume node and low volume node. I do understand that this is a slightly complicated subject, and in case you're not comfortable, or till the point you want to be comfortable with this method, try and use this traditional method and Fibonacci retracement indicator together to identify support and resistance level. Now this particular subject was just a basic sort of a thing that I am covering, because once we move to the swing trading strategies section, what I'll do is I'll be covering up both this traditional method and this high volume node method in great detail. And that is when we'll be identifying proper entry, exit and stop loss. So the next part in this swing trading series would be about instrument selection, that is whether you want to choose futures, options, stocks or some other available instruments. So that will be releasing soon as well. So in case you have any doubt about what I've shown you, do leave a comment below and I'll get back to you as soon as possible. Thanks a lot for watching this video.
Click on the subscribe button and bell icon to get instantly notified when a new video is uploaded. Thank you for subscribing.